Good morning, ladies and gentlemen. I hope you're well. Today, we're going to be talking about the Federal Reserve holding interest rates, which it did on Thursday. It held them steady. We're also going to be talking about, at the same time, the markets digesting the nomination for Kevin Walsh and what this applies for the path ahead for things like inflation, rates, the dollar. We'll be also looking at what this could mean for Bitcoin and crypto too. Japan is also heading into a snap election with fiscal stimulus and defense spending on the table. This matters because what happens in Japan and with if there's any shift in the Bank of Japan's policy, the bond issuance, investor behavior, it could have ripple effects across the global bonds market. So we'll be discussing this, the Fed pause, the leadership expectations. We'll also be talking upon the US yields, the dollar, gold and silver, the Japanese elections, the fiscal path, and what all this could mean for Bitcoin and crypto. Just very quickly, I should say I do apologize. I know there was a number of people here waiting yesterday. This stream was meant to be scheduled for today, and somehow I had it scheduled for yesterday. So I do apologize, and thank you for everyone who did join the last stream, even though it didn't go ahead. How are you, Bill? How's everything in Austin? How are you?
Hi, everything in Austin is good. I'm good, and thanks for having me.
Just very quickly, so hello to John Legend and Mark Volmer, Black Hat team, Rod C, and I think Randy's finished her stream. Okay, awesome. So let's talk about this new Fed chair. I'll actually put up the Bitcoin chart while I'm doing it. For now, do excuse my trend lines on the chart. Just double check. Yep. All right. Okay. So I was literally live on stream on Thursday when all of this started to happen. Before that, obviously, we need to talk about the Fed rates because that came out on Thursday and that's what led to the first market drop. And I do remember I was doing TA on the stream and I did say we were going to go down, but it went far beyond what I thought it was going to do on the short term. What I wasn't aware was at the same time, the Fed had come out and they were holding their policies. And then we had an acceleration, and we'll come to that in a moment because it's all got to do with the Fed. Now, on Thursday last week, the Fed held rates at 3.5 to 3.75, and it paused it paused. So it signaled a pause. Now, on the Friday, Donald Trump announced that Kevin Walsh would be succeeding Jerome Powell as Fed chair. Sorry, 1 second. I'm just making sure my mic's connected properly. Okay, so President Trump announced, or he nominated, to be fair, it's a nomination, that Kevin Walsh will be succeeding Jerome Powell as Fed chair when Powell ends his term in mid-May 2026. Now, Walsh, previously served as Federal Reserve Governor from 2006 to 2011 and is widely viewed as hawkish, so higher rates, tighter liquidity, etc. Now, his nomination does require the Senate to confirm it, but the US Senate has never actually voted down a Fed chair nominee before. It has been political messy. There has been lots of no's and delays and holds, but historically, the Fed chair nominee has ultimately gotten through. Now, the markets repriced very fast on the Welsh nomination. They were already repricing as it was here when the Fed said that it was going to hold rates, it was going to pause rate, and they had no urgency to lower them. And then you have the decline down, and this is literally because of wash. Now, Bitcoin sold off immediately. It dropped below. It dropped to around about 75,000 US dollars. And the move was roughly around 15% or something, around about 13,000 decline from the Fed holding rates and the wash announcement to the bottom, which obviously was 4 days later. 4 days later, the stocks also slipped. So it wasn't just Bitcoin. It wasn't just Bitcoin. Stocks also slipped as they were not expecting such an aggressive rate cut narrative to fade the way that it did. Gold and silver, which we will be looking at later, that was hit hard too. Gold was down 12% and silver was down around about 31%. However, the dollar, which we will be talking about later as well, held. Now, the dollar last year was down almost 10% on the year against other countries, and it was up 0.5% when or after the nomination of Welsh. And the dollar has been falling last year or most of last year as people thought the US interest rates will come down. So holding the dollar paid less. And there was also worries about obviously the US debt and politics, and it made some investors move their money out of the dollar. Now, who is Walsh? Now, the choice of Kevin Walsh to lead the US Federal Reserve clears up uncertainty on Wall Street about what's happening with this, what's happening with the next chair, but it does leave people weighing whether the former Fed governor, Park Horsh, how do you say it?
Hawkish.
Hawkish. Okay, hawkish views would mash or will mix or align with Donald Trump's desire for lower interest rates. Walsh has been a proponent of tighter monetary policy as Fed governor from, like I said, 2006 to 2011. Now, Walsh has said recently that Trump is right to press for interest rates cuts, and he does align himself with Trump. But it's kind of difficult to assess how things will move because in the past, he has been very polar opposite. Now, he was one of 4 candidates widely tipped as a potential successor to Jeremy Powell. So it's not come as a total surprise, but from his past, investors think that he will rein in the Fed balance sheet. Okay, so on his news, like I said, gold was down about 12% from the 29th of January. Let's have a look at gold, actually. Share screen, this one. Here we go. Here's gold. 29th of January. That was the Thursday. That was the day that the Fed said that they were going to pause interest rates. So it was down from the highs of around about 5,500. And today it's trading near or just over 4,900. And that sell-off includes the steepest one-day drop since 1983. This bit here, the body of this candle, forget the wicks. So the earlier surges that were driving up gold and silver were because they were safe havens, because there was demand for them, because of the US and China tensions, because of the tariffs, because of the Russian and Ukraine war, the Iran conflict, the Israeli war on Gaza, all the rest of it, and obviously mainstream media hype. That all added fuel. They were all going up. But gold is in price discovery, as is silver. Now, the hardest sell-off came after the Fed chair announcement because markets read it as so much more hawkish. However, the dollar ripped higher. I've got the dollar somewhere here. Yeah, the dollar ripped higher. When was this? 27. So this was one day before here. So on the announcement of wash, the dollar ripped higher because gold and silver are typically negatively correlated with the US dollar, and the wash news hits non-yielding assets hard. Now, the markets dumped in commodities. The markets went down on Monday. Oil was down nearly 5%. And oil was on multi-months high. Copper fell round about 3%. And it goes to show that markets across the board, cryptos, precious metals, industrial metals, commodities, along with US equities, all fell because investors did view him more hawkish. And a hawkish Fed, that signals interest rates will be kept higher for longer, supporting the dollar, and obviously making other assets less attractive. The decline did begin on Thursday. It accelerated on Friday with the steepest one-day drop in gold. Yeah, here in gold for a very, very long time, maybe about 3 or 4 decades. For about 4 decades. And silver, obviously, it plunged at one point, it plunged 27%. Here you go, 27%. And this is the largest daily decline on records. Bill, the wash move surprised me. Trump has been crying about Paul not being dovish enough, and now he's chosen what seems to be a hawkish successor. Deals must have been done behind the scenes. What do you think?
Okay, well, there is always a deal with the orange man. But I think Trump remembers Greenspan, who I happen to remember, who probably nobody knows today. Greenspan used productivity as a way to measure where rates should be. So as technology got better, right, it was the internet, routers, .com, Dell Computer, Microsoft, right? Imagine in college, I know everyone's going to laugh, but in college, my first year, I had to use a typewriter to write papers. Stick the paper in, type, use whiteout to erase the mistake. Not very productive. Next year, I had a laptop with a printer. Oh my God. I mean, it was like I could double what I could do instantly. Now, Greenspan looked at this and was like, well, the economy's growing. It might look a little hot, but it's actually not going to create inflation because productivity expands so much. They can have more goods, more stuff can move around. And just because the economy's moving and stocks are moving, it doesn't mean that they have to hike rates. As a matter of fact, what he did was he kept rates down to foster the tech growth, to not get in the way. Let this happen, because eventually the productivity, just like AI today, right? Thumbnails, titles, you know the drill, right? You can be so much more productive, and he could keep rates lower for longer. And that's exactly, the orange man remembers Greenspan. He remembers the 90s. Greenspan made like 2 mistakes in his whole career. One of them was serious and one of them was funny. We can talk about it later. Point is, Better technology equals lower rates. Now, as you said, Warsh is not really into printing. You can, ask me about that at some point, but the Greenspan was the good old days. Let the tech stocks fly and keep rates reasonable. And every time the bond market wanted a rate cut, Greenspan gave it to him.
Mm-hmm. Mm-hmm. So were you expecting Wash? How much did you know about him? He was a governor beforehand. Did you actually know about him before his nomination? Apparently, there was 4 people who the markets were expecting or who they were considering. So he didn't come as a total surprise. I did not know anything about him at all.
Yeah, I didn't know anything about him either. I mean, just you look at Polymarket and you look at who they're considering. I did hear that he was a big, kind of a Greenspan fan. So that's instantly when I knew how the Orange Man would pick him. Now, as you noted, when you go back and look at some of the things that he said, namely, we're not printing or cutting rates to save the stock market. We're not doing that. That's called the Fed put in legacy jargon. Legacy always has to have jargon that's hard for people to understand. Basically, the Fed will protect you from the downside by cutting rates when stocks go lower. He hates that. He hates the printing. He hates the printing to buy government securities. The U.S. is in such a situation that anybody who's in there is going to have to print quietly or out loud. It doesn't matter, but that's not his thing. I think the fact that he says those things or at least has said those things, maybe the market didn't like that initially. Maybe that's what happened. I think these Fed guys, when they come in and they see the reality, they do what they have to do. It was a surprise that he was a no printing guy.
Mm-hmm, mm-hmm. I mean, gold and silver are up on the day. I'm just checking now. Bitcoin is still down. So why would
Right.
Trump prefer someone who's hawkish? Because running the government or running America is not like running a household where all you want to do is pay off the debts. You want to pay off the mortgage. You want to pay off the credit card, all the rest of it. The US is not actually looking to pay off its debts. It's very, it'll be extremely difficult for them to do it. They now struggling to finance that debt? And how bad is it behind the scenes, especially with the amount of debt that they've got to refinance this year?
Right. So with the Orange Man, it's all about him. It's all about optics. I have a co-host who says something like this. It's all about him, right? So what does he want? He wants kind of almost what every gangster wants. He wants a chicken in every pot. He wants everybody making money. He wants households and people to love him. So the government has to finance debt. Great. Lower rates to zero. Just lower rates to zero. In Trump's mind, that will make people happy. That will get the economy going. He wants it to run hot, right? And he likes this idea of Greenspan because he remembers that you can let it run a little hot as long as productivity is getting better. So we have to refinance the debt. Great. Interest rates are probably 200 basis points too high just off the fact that tariffs are a tightening force. Like Powell's math is all wrong. All wrong. Right. So Powell shrank the balance sheet and kept rates too high. If Warsh does one of those two things, like lowers rates, we'll be so much better off, I think.
Mm-hmm. I mean, talking about that or saying that, when it comes to the chair, exactly how much can he change policy himself? Because it's not just about the chair, it's about the Federal Reserve that is a committee. What can one chair realistically do so far? Because technically, everyone not everyone, but the committee has been behind Powell so far.
Right. Generally speaking, the people on the committee are heavily influenced by the chairman. So if the chairman and the president want rates down, rates will go down, right? They'll go along to get along. Unless the numbers don't allow it. Like there are some numbers in the US economy that would seriously discourage your average economist from cutting rates.
Mm-hmm.
I'm not going to
Mm-hmm.
lie, right? Housing picked back up. Small cap stocks are beating all their earnings estimates. It's not as bad as people think it is. I mean, it is, but there are certain good signs. So they'll go along with what the chairman says, or they won't have a job. I mean, do you want to be downrange of the president of the United States and his Fed chair appointment? No, not over 100 basis points in rate cuts that in the AI age don't matter, and that will be Warsh's argument. Powell never adopted for the AI world. Greenspan adopted very quickly to the internet and tech, very quickly.
Mm-hmm. So we saw everything fall.
Right.
We saw everything come down on the Thursday, and that was when the announcement came out that the Fed were going to pause rates. They had no urgency of, lowering rates and all the rest of it. I think it's priced in that the Fed will reduce rates twice this year. And that always gets changed. Gold and silver dumped extremely hard. Now, was that mainly because it's higher for longer? Because of the announcement that came out on Thursday, and then obviously the announcement of a more hawkish nominee for Fed chair.
Okay, I'm gonna challenge myself to explain this simply. I call this an excuse trade. So Wall Street has a problem. They may be short silver, and commodity trading desks who talk to people who buy silver futures and derivatives through these big trading houses and banks because they actually want to get silver, right? They manage their demand and need and silver exposure, right? Like trading, but actually taking the metal. So Wall Street is undoubtedly getting phone calls like at $125 an ounce, there is demand destruction in silver. In other words, anybody that needs it, is it instantly unprofitable? Those clients are on the phone with the Wall Street bankers and brokers and commodity trading houses go, hey, you guys got to stop this or it's over. We're going to blow up. So Wall Street, being Wall Street, they devised a way to essentially take advantage of an over-leveraged market. They use very complex mechanisms inside ETFs and futures contracts, and they smashed the market. Also there was euphoria. I have 35,000 TikTok followers. A video explaining why silver was going up got 460,000 views.
Gosh.
Retail was involved, and they were involved via tokenized silver with Bitcoin as collateral. So follow me here. Some Fed announcement comes out. Wall Street goes, oh, there it is. That's our cover. Everybody will think it's the Fed announcement. Wall Street essentially, for lack of a better term, manipulates or sells or catches everyone off guard in precious metals to push it down, to crash it, to stop the freight train. Because silver was going to go to 150. It was going to go to 150, but that's what they did to slow it down, to stop it. They hid behind the Fed announcement. And then I think it might actually been made a little worse. And then crypto took it on the chin because people were borrowing money against Bitcoin to buy tokenized silver. Supposedly, Michael Berry, the big short guy, just tweeted out that Hyperliquid liquidated people's crypto when silver crashed. So this whole thing with crypto and silver was circular, and Wall Street used the Fed announcement as cover because people were going to blow up. And you also have the dollar chart. So Wall Street hedge funds, they were all short the dollar. So you know how this works, right? Everybody gets one way. If everyone's thinking the same thing, it's wrong. And then everybody gets caught going the other way.
And look at this candle. I think this was a 9% candle.
Right.
What was it? I've got it in my notes somewhere. It was literally the single biggest dump in history for silver. And that just doesn't come off just an announcement on who the next Fed chair is. So yeah, there was definitely some manipulation back there. So with Walsh being so bearish, and he has referenced the balance sheet again and again, he's very critical of expanding the balance sheet. Where does that leave crypto? Because we have obviously crypto runs on liquidity and macro stuff and all the rest of it. It's already decoupled from the M2 money supply, and if he wants to either reduce or even just keep the balance sheet steady, where does that leave Bitcoin and crypto?
Okay, so that's a very good question. I think crypto will benefit from lower rates and a decent stock market. Crypto has never been around in a recession. So I don't know that massive emergency printing outside of the lunacy that happened around COVID, I don't know if crypto needs that. Crypto just needs much lower interest rates and a good stock market, and it'll do okay. Now, when I think Warsh is critical of the balance sheet, there was a need to print in 2008, in 2009, maybe in 2010. And of course, there was a reason to print when you shut the whole economy down in 2020, although that may have been excessive. But there was no reason to print in 2011, 12, 13, 14, 15, 16, 17, 18. Not 7 years, they did $85 billion a month, and the Bank of Japan did $85 billion a month. You had negative rates in Europe. And Warsh is like, okay, yeah. And why were we doing this? You guys created this massive inflation problem just because you didn't want to let the equity market have a tantrum that you were taking the sugar away. If they had taken the sugar away, you never would have had this inflation, this destructive wave that, who knows if it ever stops. So I think he was looking at QE and balance sheet. Those are the same terms, right? Fed prints and buys assets and puts it on its balance sheet. So QE and balance sheet printing, it's all the same mechanism. It's all the same term. He's like, what? Why were we printing for no reason? You're supposed to print in an emergency. So, I mean, he's right about all that. Now, of course, the other flip side is everybody wants printing. No one wants inflation, but everyone wants printing to pump their bags.
Carry on.
No. I mean, look, they have to finance $11 trillion. We talk about this every week. They have to refinance $11 trillion. They have to save us, and they have to save Japan. So guess what? Once the guy gets in office and the men in black open up the folders, he's been a governor, so he knows how they make the sausage. That's a saying, right? He knows what goes on the inside. He knows.
Okay, so Powell's leaving. He's going. In his remaining months, what do you think he's going to do? Does he want to stable rates? I mean, they did say that there was no urgency to cut. Or is he going to take on more hawkish communications, literally just to protect his credibility, should we say, before he leaves office?
Look, Powell has shown his true colors. Right before this sort of whole meltdown started, Powell comes out and takes a shot at the administration and says U.S. debt levels are unsustainable. The guy's been around for how long? He's been around for like 8 years.
His fault.
Right. And we're weighing in on it. He enabled this by printing. And now we're getting told this. He didn't tell the last president. So the timing of that statement, right before this new guy is about to be announced, he tried to rug the spotlight. And the market took a look at what Powell was saying and said, well, we're not getting any help from the Fed between now and June. And it is reasonable to think that, this guy is not like Warsh is not leading with running the printing press, at least based on his historical statements. So, of course, the market took what Powell said very badly, right? It's like, Powell is going to sit there and keep rates high and just be like a little kid throwing a tantrum, and Stan Druckenmiller said it perfectly, really. He can't change his mind. Like, I have a guy I used to work with, and he's right when he says the hallmark of somebody who knows what they're doing in markets is somebody who is wrong or gets new information and goes, wait a minute, I have to change my view. That's hard to do. But Powell is dug in and he doesn't want to change his mind.
And I also think he's running on Fed independence, that, I'm going to keep the Fed independence, blah, 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 blah. It's all lip service, if I'm completely honest. The way that he's changing it now, I think it's doing it for his legacy. Okay, so that was the rates. So we had the rates, they stayed the same on Thursday. The next day on Friday, Walsh was announced as the new candidate, or sorry, the new nominated person for the Fed chair. The Senate has never never refused anyone. Ultimately, he should be able to get in. He'll get in absolutely fine. I was really surprised, just like you were, that Trump chose him because he does seem to be quite hawkish. But I think he's kind of needed, if that makes sense. Okay, let's talk about Japan now. Now, Japan's prime minister has called a snap election for the 8th of February. So that's coming up. She wants to strengthen her government's mandate. She believes that the ruling party, LDP, has public support, and her plan is to expand fiscal stimulus, such as things like tax cuts, especially on consumption, and also she wants to increase defense spending. They want to increase the defense spending or the national security in response to regional tensions and geopolitical pressures. So regionally, Japan faces tensions with China over the East and South Seas. It also has concerns about North Korea and their missile testings. Geopolitically, it has pressure from China's military because they're building that up, and also the massive amount of general global instability that there is at the moment. So while at the same time, Japan wants to boost growth, and this can cause a lot of issues like things like more bond issuance, defects, and all the rest of it. For decades, the Japanese bond yield was near zero. And now it's gone up to round about 4%. And that makes it very attractive to investors. It makes it very difficult for the government to pay, but it's good for the investors, and domestic yields are becoming obviously very attractive. The Japanese government could reduce foreign bond holdings like US treasuries, and we have spoken about this, and we do kind of need to speak about it again, because if they need funds quickly, any large sudden sell-off could temporarily push US yields up, although Japan typically avoids destabilizing the market. And the Fed obviously will be watching closely, ready to adjust things like interest rates, increase the balance sheet to provide liquidity, or whatever's necessary to maintain stability. At the same time, Japan has obviously its aging population. It has a shrinking workforce, and to address this, they are turning to robots and automations and all the rest of it, and they're keeping older workers employed for longer, and they're selectively letting foreign labor come in. They're also relying on monetary and fiscal stimulus to keep the economy moving. All of these dynamics, including the bond issuance, the yen volatility, can affect global markets, yen carry trades, and obviously a ripple effect into crypto and stable coins. I'll come to stable coins in just a second. But was the snap general election a desperation move by the Prime Minister to get more support, to get all of these things, to get her policies through, if that makes sense?
Sure. Okay, well, being an American, I'm not used to the parliamentary style where you can just call an election. It's always fascinated me, but I am assuming you are correct that she was popular and things were going well. So now would be a good time to have an election. It's never a good time to have an election when you're unpopular, unless you're so unpopular, people want you out. All right. In this case, I think with what their bond market was doing, before the general public figured it out, or to help the general public. In other words, if the general public wanted help, which I think they do, I think the grocery store in Japan is a total nightmare, if I understand it correctly. So she's talking about consumption taxes, trying to help people, and people are like, oh yeah, please help me.
Yeah.
Right? Please help me. So if that message was going to resonate, call an election. Defense spending. I don't think you can count on the United States writing the check to defend everybody, which includes Europe and Japan. It's just logical. I don't think we want to abandon anybody, to be honest. I know we make a lot of noise at Europe. Some of their policies, like the French raiding the Twitter office today, are unbelievable. But I don't think we want to leave the Japanese hanging. I just think the Japanese think if China goes into Taiwan, why would they stop? They may not stop. And frankly, in an era of AI, robots, and drones, Japan is historically the land of tech and robots. Seriously. And this is going to go from science fiction to reality. They could defend themselves against China if they buy the right stuff, or build the right stuff, or, spend their defense allocation correctly. And of course, that boosts economic growth, sort of. I mean, they say it does. It doesn't boost it as much as you think it does. But it's going to play well. Patriotism. And that comes back to what you talked about, which is, the Japanese prime minister is going to get with the insurance companies and the Bank of Japan, and they're going to say, bring the money home. You know what I'm saying? Dump whatever foreign assets you can dump and bring the money home and buy our bonds. Great yields, 4%, right? We'll give you 4%, buy our bonds, not someone else's. And that's going to happen. And that may be happening. This trade could affect NASDAQ. This could affect a lot of things. So, no one's paying attention. Let me rephrase. You can't not pay attention to these things, even if they're not on the tape. Like nobody thought this Fed thing was it. Everyone was like, yeah, it's in poly market, whatever. And then the next thing you know, 3 events happen at the same time, including a crypto liquidation.
So what is the top indicator or the red flag that the Japanese bond market is coming disorderly? Or would we only know after it's too late?
Well, I think sometimes I look at their 30-year bond, right, which has an interest rate of 3.63. I think if that went through 4%, I mean, that's a huge move, that you would have some very serious distress. I also think you have to look at dollar yen, right? Right now, $1 gets you 155 yen. Okay. If I'm sharing screen now, I know we talked about this last week. I mean, this is the mother of all indicators for Japan, right? If the yen collapses and the dollar skyrockets, okay, this is what the disorderly move in financial markets that we don't want. We don't want this. So, this is dollar yen all the way back to 1985. Dollar yen could not go above 160. Okay. And here's why. So let's say you had, let's say you're a Japanese insurance company and you have a share of you have one share of a US company that costs $1, right now, if you sold your stock and took your dollar, you get 160 yen for it. Now, if the dollar skyrockets and the yen collapses, and from a technical analysis point of view, you go into this air pocket from the 80s, all of a sudden, a Japanese investor could sell that share for $1 and get 252 yen. So the higher this thing goes, the more incentive there is to bring the money home, which is why Jerome, I don't cooperate with anybody, Powell, understood this and set up a facility to sell dollars and buy yen to prevent dollar yen from going through 160. Because if you devalue the yen and strengthen the dollar, you make any company in Japan with US assets 25% richer overnight. If you have this big devaluation, right? And you don't want to do that because they're going to sell and they're going to go home.
Just quickly, let's go back to Wash again.
Sorry.
He's doing something right. He's doing something right because since his nomination, the dollar index has increased. I think, I don't have the numbers in front of me, but by 0.5%. So last year it was down round about 10%. Since his nomination, let me just double check right now where it is, the dollar index. 1 second, let me share this. So when was he nominated? He was nominated there on the 30th. That's a massive candle. So the dollar index, the dollar has risen around about 0.5%, since or on the day that he was nominated. So he is doing something right. What do you think?
Well, there's a couple ways to look at it. One, Warsh isn't, he isn't printer friendly. But what I really think happened is, if you think about what crypto and precious metals Twitter looked like with silver at 125 and gold at 5,500, they're like, gold and silver are going up forever and ever and ever. The dollar is going to zero. A new monetary world is here. This time is different. The dollar is going to zero. Everyone was long gold, short the dollar. And in the foreign exchange market, they just got squeezed out. It's just a simple squeeze. The legacy foreign exchange market is huge, like $9 trillion in volume a day in the fiat trading market. So they just got caught. Right now, Warsh is not dollar negative by himself. He's not. So when that happened and precious metals topped, they got caught. And that's why the dollar went up. They just want to keep dollar yen below 160. Right now it's at 155. So most of that adjustment was in the euro, which is what drives the dollar index.
And this is another indicator for Bitcoin as well, where Bitcoin's going because it's never negatively correlated with the dollar, just like gold and silver are.
Right.
Okay, I was actually today, apart from looking at everything else that was happening, because a lot of things have been happening today, I was actually reading up about the stable coins in Japan. Now, Japan's mega banks have aligned with We're Building It, where it's mainly for payments and settlements and tokenizations of finance, not meme coin culture. And we spoke about tokenizations in the last live stream that I did with RWAs. So underneath Japan's amended payments framework, stablecoins are treated as electronic payments instruments, and issuing them is limited to licensed entities such as banks, trusted companies, and some money transfer businesses. But they have a lot of consumer protection as well. There is regulation there. Japan's big banks are saying something along the lines of, we do want this yen stablecoin, and stablecoin issuers can become meaningful in buying Japanese government bonds over time, especially once all the framework is put together and the regulation is in there. Time and time again, we are hearing of governments looking to sell bonds into large stablecoin issuers. There's going to be a massive market, an absolute massive market. If this happens, how is it going to affect Bitcoin and crypto?
Well, ironically, governments are onboarding everyone into crypto or onboarding everyone into Bitcoin, whether they know it or not, right? They have to sell government debt. Stablecoin companies buy tons of it
Mm-hmm.
to back the currency. It's a way of printing without printing. This is why Warsh's no QE thing is not that big of a deal. Besant is going to do it through the treasury. That's how they do stablecoins. They issue debt, someone buys the debt and then uses that to create money. You don't have to print. You just have to get entities to buy the debt and issue stablecoins. So the Japanese need people to buy the debt. Their insurance companies, their banks, they're going to come to the rescue. It'll probably be backed by the central bank. That's fine. They're going to do it. They're going to do the stablecoins. And eventually, like I said, eventually you get hurt enough times at the grocery store, or you get scared of a currency or a bond market scare, because the Japanese public knows where interest rates are. They know where mortgage rates are. You know what's going on with mortgage rates generally, especially if there was a shock. They know, right? So, the government has a huge incentive to bring people in and to get on board with these things. And the Japanese public one day, just like all of us, are going to go, you know what? I think I prefer Bitcoin. I'll take these stable coins and I'll use them. But you know what? I need hard money. I need hard money that's actually portable, that, is mathematically scarce, not theoretically scarce.
Mm-hmm. Mm-hmm. Okay, that was absolutely brilliant. Thank you so much, Bill Noble. So we spoke about a number of things today. We spoke about the Fed holding rates, how that affected the market. We spoke about the Kevin Walsh nomination, how that affected the markets, how it affected not just crypto, but other markets as well. We spoke about gold, silver. We spoke about Japan, the bond markets, quite a lot of things. This Thursday, I'm doing a cycle check. So there will be a lot of TA, there will be a lot of charts and all the rest of it. But yeah, I really enjoyed today's discussion. And thank you, Bill. And thank you to everyone who's watching. I'll see you on Thursday, and we'll be back next Tuesday for another live stream.